Well, hello everybody. The market is acting highly efficient right now, playing within these daily expected moves. However, we got a wide open range left for the remainder of the week. So we're going to talk about some of the patterns that I'm seeing out here in today's stock market brief show, where we navigate the financial markets through the lens of technical and intermarket analysis. These episodes are brought to you in support by my Patreon community. If you want to find out more about the Patreon community or Discord group, there's a link down there below. Also, links to Interactive Brokers, one of my partners, and now Top Step. Yes, I recently been playing around with Top Step. I set up a Top Step account, the 50K one. Been playing around with it. I enjoy it quite a bit. I have not got a funded account yet, but I'm working my way to get to that funded level, and I'll share kind of my thought process and everything as we go. I did write up a little review if you want to check that out. Let's get into today's episode. All right, everybody, welcome back. So we are starting here at the 11 sectors that make up the S&P 500. And what led the way? Utilities and real estate, both rate-sensitive sectors. What do you know? These rates are becoming important. We talked about utilities yesterday and how it was down and it looked a little off, especially when bonds were up. We thought maybe it was because NextEra Energy was reporting. Well, NextEra Energy reported. We saw the bump up and we had a winning day for utilities. Now towards the bottom of the list, we had energy. 10-year yield looked like it back off today. It was up ever so slightly to flat, but it did back off from the intraday high as we're still just pulling back in an overall uptrend in yields. So TLT, right? If you take a look here, we saw a nice big move in TLT playing off that positive divergence, but it's still in an overall downtrend. So just be aware of that as we're coming back into and around the declining 20-day moving average. Oil backed off quite large too. We talked about that bear flag structure. Now, after 3 big down days like so, are we going to eventually see a little bounce in the very near future? Well, we really would, if you're bullish, you'd really want to see it reclaim that 50-day moving average as we're kind of just trending right below that as it stands. Now, we did have some names report earnings. Microsoft reported, and we tagged its upper earnings expected move. Google reported, and we tagged its lower earnings expected move. So we'll see how the market opens up. But, one big mega cap was up, one big mega cap was down. What's that mean for the ES in the aftermarket session? Well, we're basically flat to unchanged. Now, we do still have obviously some big names reporting here. So tomorrow after the close, we have Meta, or depending on when you watch this, right? So we have Meta reporting Wednesday after the close. And then after that, we have the likes of Amazon and, many other names. So just be aware that there is a lot of action still packed within this overall week. Interestingly enough, today, the dollar was up a pretty large move, erasing all of the loss from the prior trading day. And this thing is still kind of in this compression pattern. So to see the S&P 500 up and the dollar up, it is interesting to see them positively correlate. So we'll see here if this is just going to continue to consolidate or if we are going to break out, and that's going to put pressure more onto the S&P 500. If you take a look at gold was down ever so slightly, but I will say it's holding up rather well with the fact that the dollar was up pretty large today. Copper was also a nice bounce today while the dollar was up. And you can see here, copper actually, so if you look at just the closing prices, you'll see like there's, we have a higher low here, but we did intraday come lower. And then we did have lower low closing lows here in the S&P 500, which is a positive divergence if you're looking at it that way. And that could lead to a potential bounce. We've seen that happen here. We saw it happen here, here. We see the S&P 500 bump up after when you see copper put in a higher low. I'm not putting too much onto that. So if copper starts backing back off, right, we're kind of getting a little bit of a relief bounce here. But if we start breaking down through these, 3.5 level, it could spell out more trouble as well. But to see some relief is a positive sign, and S&P 500 there is following. Bitcoin also seeing a large rip. Haven't seen this large of a rip really since middle of June, and then prior to that was March. And if I look at actually the S&P 500 below us, I find it interesting there that we had these kind of corrections in the market, and then Bitcoin led the way out of the S&P 500 moving up higher. So after we saw Bitcoin move higher there, we saw the market kind of rally. So is this going to lead us to a potential bigger rally there too? I will say that the Bitcoin over gold ratio, or the Sailor to Shift tool, the buy signal was over here, right? And we started moving up from that point. So the buy signal The Sailor to Shift tool still remains, in my opinion, one of the better tools out there to determine when to get out of Bitcoin and when to get in. We have the green lines, which are buy signals. The reds are sell signals. Sometimes we get no triggers, and the no trigger comes from my personal strategy that I use and I shared on my Sailor to Shift video, which you can find in the description or just Google it. Now, we're going to hop into the 15-minute time frame. I'm going to update you on the new daily expected moves. Daily expected move above us is 427.13. Below us is 420.13. What do I see going on here? Well, we still have a wide open range, as already previously noted. Let me fix that. Between the upper weekly and the lower weekly, and prices, slightly up, obviously, on the week we closed here, and we're right here. So, we're up ever so slightly. Now, what I'm noticing is a couple of things, right? So we're in a downtrend, all right? So that's bearish, right? We're below the quarter to date, that's bearish. We're above the week to date, that's bullish. And we're putting in higher lows currently, which is bullish. Okay, all right. So how do we play this? Well, you can see as we're kind of compressing here and price actions coiling here, we had expansion lead to contraction, and we have a potential large shot for the remainder of the week with all these earnings. So if we start getting back above this resistance zone, which is about 424.50, that can open the door to try to claim the 5-day moving average. However, albeit it is declining. So what you want to see is it to start flattening out to turning back up. Obviously, it would be a better sight. But if we start taking out the lows right here, it would basically tell us that this opens the door to this prior low over here. Okay, so as price is kind of moving forward, at the 5-day moving average is declining, we have tomorrow, right? That's 1 day, 2 day, 3 day, 4 day, 5 day. We're going to start to lose the data from this time for a period back and start to move it over here. So if price can stay within this range, the 5-day moving average will decline, but it will start flattening out in the near future. So if price starts getting back above it and this starts turning back up, that could be a very bullish sign for the overall market. However, right, if it comes down and we just decline and we break down further and it holds as a level of resistance, putting in another lower high, that would obviously be more bearish. So as the time progresses, we have important levels, like I said, 420.13, and then above us, which is 424.46, as price actions coiling within that channel. Watch for a potential break back test and for the back test to hold. If we go out on the economic calendar, what do we have going on tomorrow after the close? It looks like Fed Chair Powell is going to be out. I don't know what he's going to be talking about. We do have some economic data dropping. New home sales, 30-year mortgage rate, et cetera, et cetera. And then Thursday, we get some bigger data there, the GDP growth rate, and that could put pressure, obviously, in the bond market. So just be aware that this economic report can have a heavy weight on yields themselves. If I do look at a relative strength line of what's taking place, I'm starting to notice safety ratios pick up. So gold over S&P 500, that's picking up quite strongly. Utilities over S&P 500, it's still in a downtrend, but it looks like it's trying to reclaim that 50-period EMA. Consumer staples, the same thing. It's in a downtrend, but it looks like it's trying to reclaim that 50-period EMA. TLT over SPX, we saw a little bit of an uptick. Overall, still in a downtrend, but it is starting to show a little bit signs of strength. So if that actually starts picking up, that could not be the greatest to see more of that flight to safety. And then we look at healthcare over S&P 500. It's rather flat overall, but it is above that 50-period EMA there too as well. So we do see safety things picking up pace. Price action, it's obviously consolidating, but we have still a lot of volatility packed in the week. So I'm looking for breaks above here or breaks below over here for a potential stronger move. I will say that being in a volatile environment, always be on the lookout for potential fake outs. We see a lot of those. So what you'd like to see is to see, a breakout back test and see some strength and really get back above that 5 EMA if you're bullish. If you're bearish, the same thing, right? We can snap back down to the daily expected move or come outside of it. All right, but price can obviously snap right back. So I wouldn't short down into these levels. I'm looking to go long. If you do short, be tactical about it. It's a lot harder to short than it is to make money. It's harder to make money being short than it is to make money going long in this kind of game. That's all I got for you on today's episode, everybody. Hope it helps out. I'll see you later.